We're taking $5,000 and investing into the top 5 highest paying dividend ETFs from the YieldMax website. I'm Wes, and this is Finding Finance. We're going to be taking a look at a financial strategy that has become very popular these days. That's dividend investing. Not just dividend investing, but high dividend investing. Stick with us as we show you what would actually happen if you invested into those high paying dividend ETFs. We're using real money in a real account, no paper trading. Each week, we'll show you actual dividend payments straight from the brokerage account. We'll be keeping track of these numbers in a spreadsheet for full transparency along the way.
Okay, let's start by taking a look at the YieldMax website to see what kind of returns we're talking about here. We go to our ETFs, view all to ETFs, scroll down a bit, come to the single stock option ETFs here. Resort this to have the highest return at the top. So we have CRCO at 85.68%, MARO at 85.29%, MSTY at 70.36%, RDYY at 65.98%, HIYY at 65.42%. All of these are weekly distributions, and you can see here that this rate is an annual rate, so you'd have to divide that by 52 to get your weekly rates here. Now let's move over to my brokerage account at Fidelity. I'm using Fidelity simply because I have it set up already and there are no commissions for this type of activity. Here you'll see the $5,000 that we put in on December 24th. We put it in a little early just to make sure that we have it set up ready to go before the end of the year, so we can purchase these ETFs right at the beginning of January. So what I tried to do was get this as close to $1,000 for each one of these ETFs as possible. We ended up with $4,976.31. It shows pending, but they are purchased. So we have about $26.51 left in cash, and actually we have gained $2.82 in a little bit of interest from the cash that was in the account before we purchased these 5 ETFs. If you find this interesting so far, let me know by hitting the thumbs up down below. Next, let's take a look at the transparency side of things. The objective of this experiment is to test whether a rules-based high dividend ETF strategy can generate and compound income over time. We put $5,000 in, we purchased 5 of the high dividend ETFs from YieldMax. 3, 4, and 5 kind of goes together. We're going to be accumulating and tracking these weekly. As the cash comes in, we're going to be reinvesting those into the top 5 ETFs with the highest current dividend yield at the time of reinvestment. So we're going to go back to the YieldMax website each week and make sure that we are sticking with the top 5 highest paying dividend ETFs. If they change, that's fine. We'll record it in another tab. If it doesn't change, that's fine. We'll buy more of the same as cash is available. We're not going to be adding any more cash to this account. What this does is what it does. You're going to be seeing it if it goes well or if it goes bad. Also, guys, this is an experiment. This is not for financial advice. This is our weekly snapshot. This is going to show us each week where we're at as far as market value, how much income we've received for that week, when we got paid, how many shares we have, what the price that we paid for it was. Down here is a visual summary of where we're at. You're going to be seeing this hopefully grow in numbers. Now, the cash remaining should always be relatively small because we're going to be purchasing those, but this number here should be going higher and higher as we go along. Next, we'll look at the weekly log. So this tracks the market value each week, the dividends that we received that week, how much we reinvested, how many shares we bought total, and which date we purchased them on. We're going to be keeping track of this for 52 weeks. This information is going to be visualized over on the progress chart. This is going to be a visual representation of how the account does over the course of the year. Ideally, we would like to see this number grow, 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 grow. You can't see it right now, but there's a teeny tiny yellow right here. That's the dividends received. Now, we should start seeing each week that yellow will be growing and growing and growing, but we don't want the green to be going down. We want the green to be going up and the yellow to be going up as well. Over in the dividend detail tab, this is where we're going to keep track of every single dividend that we get from which ETF, how many shares we have, and any notes that we have along the way. All right, let's take a look at the progress chart. One important thing to understand about high-paying dividend ETFs is that they can be susceptible to share price decay. I'll cover that in more detail in a future video. Because of share price decay, it's possible that we're going to see the market value go down and the dividends rise. Or we could see the market value slightly increase because we're going to be reinvesting. But that's what we're going to show. This is what this whole experiment is about, is what happens over here at week 52. Are we actually going to gain anything, or are we going to take a bath on this $5,000?